Hi everyone. Today we will be overviewing mobile app financial model. So if you have this business idea in mind, this overview may be useful for you because here I will be showing you what types of inputs affect financial efficiency, what inputs affects the cash flow statement, simple, discounted payback period, and other financial projections. So if you find these tutorials and overviews valuable, please like, share, and subscribe to our YouTube channel. So first of all, we need to start with the basic rule. We need to introduce the rule that saying that all our inputs should be highlighted with specific color, because that will ease the scenario building many steps ahead when financial model will be ready. So when you will be using this model, any third parties will be using this model, like investors, your business partners, whoever, all inputs must be easily findable. So that's why we need to assign specific color that will be used for all the inputs through the whole financial model. So in our case, that will be blue color. These are the inputs, these are the inputs, these are the inputs. So this will be the unique color for all our inputs. Then we need to start. Let's go block by block of inputs, and I will be showing you what affects the cash flow statement, payback period, and all the financials. So now let's move to the first block of inputs. Here we are describing different types of customers that will be downloading and using our app. The best way is to create different types of customers, so later when financial model will be ready, you will be able to switch on and off different types of customers, and you will be able to see how this or that type of customer affects the cash flow statement, affects how much financing you will need in this or that scenario. And if you are too optimistic with this or that type of customer, you will be able to switch this customer off, and you will be able to see how much money you will need specifically in that scenario when this type of customer will be off. And maybe you will have to rethink your business concept. So first of all, you need to get rid of the average type of customer. You need to create some portraits of different types of customers that will ease your future scenario building, stress testing. When you will be showing your financial model to any third parties, everyone will understand that you understand the project, that you know that there are different types of customers. They are differently using your app. They are some of them do the internal purchases, some of them do not. Some of them have one intensity of internal purchases. So there are a lot of parameters that affect their behavior, and you need to be able to switch them on and off to see how different types of customers affect your business concept. So this means that you need to have some interface, the environment, where you will be able to switch them on and off. So the first block of inputs will be dealing with the ability to switch them on and off and see how they affect the cash flow, payback period, and all the financials. Then we're moving to the next block of inputs. Let's assume we have different types of membership. So in our case, for example, let's say we have 6 types of membership, and each type of membership has different subscription amount, monthly amount. We can specify it here. For each type of membership, we can specify a different subscription payment. Here it is. Now we are moving to the next block of inputs. We need to specify the amount of in-app purchases during the life cycle of the customer. So for example, this from left to right, here we have the month of operating activity since we launched the app. So this is the first month of operating activity, second, third, and so on. And here we can specify how much money does each type of customer spends inside our app while using it. So this is a dynamic variable, so we can specify these values of purchases inside the app for each type of customer dynamically. And after 3 years of operating activity, we can extrapolate these numbers here. So we can see that at the beginning of the operating activity, different types of customers may not be purchasing a lot. So this is a flexible variable, and these purchases may appear, let's say, not from the first month of operating activity. They may appear, let's say, after a year of operating activity. So this flexible interface will give us the ability to see how much financing we need in this scenario, in that scenario, because this interface will, let me go to the cash flow statement. These inputs will affect the period of operating losses. Here they are. So we have cash flow from the operating activity, and these values from that block of inputs will affect the operating losses that project may produce during first, let's say, year or 2 years of operating activity. This will add additional realism to your financial model, and your investors will see that you understand how this business works. So this will and plus that will show you the more realistic amount of financing that you will need to launch this business idea. Because when you launch your app, the revenue from in-app purchases will be low, and it will start growing in different speed, and you will be able to create different copies of this model and see how different growth of the in-app purchases will affect the amount of money that you will need to start this business in this or that scenario. So you will, when the model will be ready, you will be playing with this block of inputs a lot. Then what also is very important, so next block of inputs deals with the situation when different types of customers may be jumping from one type of membership to another inside the timeline. So for example, one type of customer may start with membership number 1, and then let's say after a year of using the app, it may go to this customer may go from membership number 1 to, let's say, to the membership number 4, and this will also affect the cash flow statement. And you will be able to, having these block of inputs, you will be able to play with all these inputs, and this will show you how your business idea flexible in this scenario or of that scenario. You will be able to see maybe you are too optimistic, you will need to rethink your business concept. So usually future business owners are playing with these two blocks of inputs a lot. When model is ready, everything is ready, so they are playing with all these inputs a lot, building scenarios. What will happen if the customers are jumping to more expensive memberships earlier or later? This will tell you a lot about your business idea. Then moving to the next block of inputs, we may have or we may have not the revenue when someone downloads your app from the App Store. For example, we can put 0 here or any other value, so we can specify it here. So this is the type of revenue that we may have or we may not have. Moving forward, Then we have here we can switch on and off different types of revenues. We have the revenue. We may have the revenues in-app purchases, from membership, from app download, and here we can switch on and off different types of revenues and also see how this affects the cash flow statement, P&L statement, simple discounted payback period, all the financials, and so on. So this is a very important block of inputs. You will be also playing with these inputs a lot. That's why it's very important for any third parties. They also will be playing with this switch on and off toggle. So bear in mind, you will be building a lot of scenarios using this block of inputs, and you will be switching on and off different types of revenues and see how these or that scenario will behave inside the timeline. Then we are moving to the timeline. So we need to specify the year and month when we start the operating activity, when we hypothetically get the first revenues. And then once we did that, here we have the timeline. These are the first 3 years of operating activity. Here we can extrapolate the data, and what we are doing here, we are specifying how many new customers we are specifying the acquisition of new customers. And what we also have in this block of inputs, we're specifying the percentage of new customers that come from ads, because we may also have we will have definitely the cost of acquisition of one customer, and here we have 2 lines. So first group of lines, here it is. It describes how many new customers are getting inside our project, our app. This is the first block of inputs. Here it is. And then this line shows us how many new customers come from the ads. So we are doing the ads, so we are spending the budget on ads, and according to this budget, we may also have some cost per one new customer. And these 2 inputs, they are flexible in timeline. So the percentage of new customers that come from the ads is flexible inside the timeline, and the cost of a new customer is also, that comes from the ads, also a flexible variable. And also these are direct costs, and they also affect the cash flow statement. These also affects the simple discounted payback period. So here we can specify the amount of new customers, and then we are specifying how many new customers come from the advertisement, and then we're specifying what is the cost of acquisition of every new customer that comes from the ads. Then we are moving forward. We're moving to the payroll. Here we have the list of positions, the salaries per person on each position, and then we can see the timeline. Here it is. And then we are specifying how many people we have on each position inside the timeline. Moving forward, then we have the fixed cost items. We also have the timeline. We have different types of fixed costs named here from top to the bottom, and then we specify the growth of fixed costs for different fixed cost items inside the timeline. Then we are moving to investment plan. Here green column shows us the moment when we start the operating activity. So this is a flexible variable, so we are specifying it here, August 2020. So this August 2020 appears here, and then we're assuming that we have 6 month long investment stage before we launch the app, and here we can specify what we are investing in, and here in this area we're specifying how much we are investing in during the investment stage. Then we are specifying the first year of our financial projections. So we are assuming that the first year, let's say, of investment stage will be 2020, and our story, so the first year when we start investing in our project will be, let's say, 2020. We can specify any year here. Then we are describing the depreciation and the terms for the depreciation for different investment plan items that we've mentioned here inside the investment plan. Then we are moving to the taxes. So we may have different types of taxes depending on where you live. So you may have value-added tax, asset tax, salary tax, profit tax, revenue tax, or you may have revenue minus all the expenses tax. So here is we mentioned the tax base for this or that tax. This is the tax rate, and now we are moving to the most important table inside our model. So this is the cash flow statement. It shows us how much financing we need. So if we have equity and loan, so this value plus this value is showing us how much financing we need in this particular scenario, and the cash flow from operating activity is showing us how business breathes without external expenses like loan payments. So it shows us that here we have some operating losses, and then in October 2023 the project starts generating its own profit, so we don't need extra financing anymore. And if we go back, if we look at the last line of the cash flow statement, cash balance at the end of the period, we will be able to see that at first stage our project is eating cash. We can see it here. So the amount of the cash balance is melting, it's getting lower, and then it starts being mathematical zero, and in October 2023 the project starts generating its own. We don't need extra financing, so the project starts generating its own profit. Then we have the P&L statement. Then we can specify the discount rate for this or that scenario. Here we have the financial, simple, discounted payback period, profitability index, net value, present value, equity, loan needed for this specific scenario, internal rate of return. If we have any loans, we can specify the amount of loans, term of loans, year and month. We can specify the term of loan in months. When we get this loan year and month, then we can specify the interest rate, the grace period for interest payments, and principal payments. So we have several loans that we can add to the project, and they will be living here. So we can press the plus and see all the details of the revenues, payroll, direct costs that are hiding behind these lines, behind these pluses. Moving forward, then we have a couple of charts. So the charts are showing us simple and discounted payback period. So this is the moment when the chart crosses the timeline. This is the simple payback period. This is a discounted payback period moment. The next diagram illustrates us the loan coverage ratio monthly. These are the revenues and total costs inside the timeline. This is the profit done monthly, cumulative. This is the profitability monthly, cash balance at the end of the period. Here we have some charts for the revenues and total cost done yearly, profit yearly, profitability, cash balance at the end of the period, operating profit and debt payments being shown together, loan coverage ratio. Then we have the cash flow statement yearly, P&L statement yearly. So once you will be building different scenarios, you will be looking at these tables, and you will be able to quickly see how much financing needed, when you need this financing, why you need this financing, what will be financed, and when. And then you will be doing stress testing a lot. So here we have in yellow tabs, you have different, so we've added stress testing parameters to the revenues, payroll, fixed cost, direct cost, investment plan expenses, interest rate, loan amount. So we've added sensitivity parameter to these inputs. And what you can do, you can press the sense button, and you will be able to see how increasing or decreasing of the revenues to this extent with this amount will affect the financial efficiency. What you can do, for example, you can adjust the step, press button again, and see how this affects financial efficiency. The same story goes with the payroll, fixed costs, direct costs, sensitivity, investment plan expenses, interest rate, and loan amount of loan that you will need to start your business in this or that scenario. So once your model is ready, you will be playing with all these inputs a lot. You will be switching on and off different types of customers. You will be specifying, you will be playing with membership payments. You will be playing with the how much money will be spent by different customers monthly inside your app, and how these payments will be allocated inside the timeline. You will be playing a lot with types of membership, how whether your customers jump from one type of membership to another inside the timeline. Then you will be playing with switching on and off different types of revenues from financial model. You will also be playing when you start your operating activity. Very often entrepreneurs are playing with the amount of customers, that customer acquisition, and how these acquisition is allocated inside the timeline of their project. How many customers are coming from the ads? What is the cost of acquisition of a new customer that downloads the app? So these parameters are very crucial for your financial efficiency. Then usually lots of scenarios are being built playing with the payroll. So usually entrepreneurs are it takes them a lot of time to test all the parameters, how they affect the financial efficiency, payroll, fixed costs, investment plan expenses, how interest rate and the amount of loan affects financial efficiency. So stress testing is very important, and scenario building is also very important. That's why you need to highlight all the inputs. So this is crucial for you, any third parties that are being involved in your project. So I hope you enjoyed this application financial model overview. We have more than several hundreds of different financial models. We will be overviewing them one by one. So if you find these overviews valuable, please like, share and subscribe to our YouTube channel. See you in next videos, and bye.